this is Adam Khoo here, and in this video I'll be talking about how you can identify and trade only the strongest momentum stocks in the market at any given point of time. So these are stocks that we want to swing trade or trend follow for the short term. Now, here are some interesting facts. On any given year, when the stock market goes up, do you think all the stocks go up? No, only a small percentage of the stocks actually drive the market higher. Now, a lot of you would know that the market is determined by the index, and the most commonly followed index is the S&P 500 index. So again, for example, this year, if the S&P 500 goes up, does it mean that all 500 stocks go up? Doesn't mean that. In fact, in the market, there are altogether about 8,000 stocks listed in the US. 8,000, okay? And here's something interesting. On any given year, the best performing stocks, which are the top 25%, right? Top 25% would be about 2,000 of them, right? The best performing 2,000 stocks actually account for all of the gains of the market, the top 25%. And 75% of the rest of the stocks, or the other 6,000 collectively, some make money, some lose money, collectively only return 0%. So that means that at any given point of time, to make money in the markets, you have to identify the top 25% of best performing stocks, because these top 25% actually make up the majority of the gains in the index on any given year. Common mistakes that a lot of traders make is they look for technical trade setups on any stock, right? So for example, some people, they look for breakout setups where they look at a stock going into consolidation, going sideways, and then they start to see the stock breaking out of the consolidation, and that's a trade setup, so they start to buy, they go long, right? But the problem is this, right? If that happens to the 75% of the low performing stocks, you go long, you buy, what happens? There's not enough momentum to carry the stock up. You'll tend to fail the breakout. Right? Another example, a lot of people, they look for retracements. They look for retracements in the trend. So they see a stock on an uptrend going up, retracement, up, retracement, up, retracement. They thought, okay, I'm going to buy over there before it goes higher, right? But again, because they don't buy the top performing stocks, they buy the 75%, the low performing stocks, what happens? When you get in, it loses momentum and it crashes all the way down. So here's the thing. In order to get the highest probability of success in trading, you don't only look at trade setups like a breakout pattern or a reversal pattern or a trend retracement pattern, but you only trade stocks that are within the top 25% of all the stocks in the market at any given point of time. These are what we call the highest performing stocks in the market. And you look for trade setups, technical setups, only from the universe of these top 25%. So that is one of the trade secrets that we use as professional traders. So question, how do we identify the best performing stocks in the market at any given time? Now, it's not always the same stocks because they take turns, right? So on certain months, certain stocks could be leading the way. These are the leading stocks of the month. And the next month is another set of stocks. And they kind of like go through this rotation. Sometimes it's technology stocks, sometimes it's energy stocks, sometimes it's consumer discretionary stocks. So we need a way to measure at any time which are the stocks that are leading the way, which are the best performing stocks. And there's no better measure, there's no better indicator than using what is known as relative strength, or I like to just call it RS, okay? Now, I know some of you are thinking, wait a minute, is this RSI? There's an indicator called RSI, or Relative Strength Index. This is not RSI. It's something totally different from RSI. What's the difference, right? So usually if you use an RSI index, what does it measure? RSI. RSI measures the strength of the stock today versus its past performance. So it's measuring the stock against itself. That's RSI. But I'm talking about something different, which is relative strength. What is relative strength? Relative strength is measuring how strong a stock is versus the S&P 500 versus the rest of the market. So let me give you an example. So there are some stocks that could be going up right now. They're going up and you think, hey, it's on an uptrend, right? But the problem is that if you measure the stock against, say, the S&P 500, yes, the stock is going up, but it's not going up as much as the S&P 500. So it has low relative strength. Got it? Okay. Another example could be this stock could be going up. Okay. And if you compare it to the S&P 500, S&P is kind of like that. So which stock would you rather trade? Excuse me. Would you rather trade this stock or this stock? So you can see that this stock is going up. Let's call this stock A and let's call this stock B. So again, stock A is going up, but it is going up less than the S&P 500. So it's got low relative strength. It's weak relative to the market. Okay, but for stock B is going up, but it's going up even more than the S&P 500. So it's got high relative strength because outperforming the market. Okay, so we only want to look for trade setups on B stocks. So let me give you an example that some of you could relate to, right? So say some of you got kids. I've got two daughters, right? And my daughter came back one day and she said, Daddy, all my friends, we went through a maths test and all my friends failed really badly, right? They got, 30%, 40%. I said, oh, that's horrible. And she said, you know what? I got 50%. I passed. Okay. So she was pretty smart because she kind of like framed me that all her friends failed at 30%. So she got 50%, which means, she did well, right? So what do you call that? So in other words, my daughter had high relative strength compared to her class. That's called relative strength, okay? On the other hand, if, your son comes back and says, Mom or Dad, I got 80% for math. And you thought, great, 80% is good, right? But you find out that everyone in the class got 100%. Everyone got full marks and your kid got 80%. So guess what? Your kid didn't do well. It's got low relative strength. Yeah? So in other words, to measure how good a stock is in the short term, the price performance, you have to measure it against the rest of the market. Is it outperforming the market or underperforming the market? And the way we measure it is using an indicator, again, known as relative strength. And we only want to trade stocks with the highest relative strength. We only want to trade stocks, I would say the top 20% of stocks with the highest relative strength in the market. So once again, high relative strength means high momentum in the price. So how do we measure relative strength? There are a couple of ways. So one way is to simply use certain charting software. So I'm using Thinkorswim over here. And on Thinkorswim, you have relative strength. So let me just show it to you right now. So for example, let's put in a stock with high relative strength, or QDEL. Okay, so you can see that this stock's kind of like going up, right? But does it have high relative strength? Is it going up stronger than the market? Is it something that we're going to trade? So we punch in this indicator. Let's go to our indicators over here. And we're looking for relative strength. Here we are, relative strength. And again, this is different from RSI. RSI is something completely different. This is relative strength relative to the S&P 500. Okay, so punch that in and there you go. Okay, so how do you read this indicator over here? So you see this red line? Okay, now first of all, we usually measure it over the last 6 months, right? So let's go to a 6 months time frame. That's 6 months, okay? Daily candles, okay? So 6 months ago, you can see that this red line and the blue line, they are kind of like at the same place. So this blue line represents the strength of the stock, okay? And the red line represents the S&P 500, okay? So 6 months ago, all right, they were at the same benchmark. So in the last 6 months, which has outperformed? So you can see that the blue line, which represents the stock, is above the red horizontal line. As long as the blue line is above the red line and the blue line is going up, it means that this stock has high relative strength. So I will only trade stocks that have this pattern, that have high relative strength. Okay. Now let me show you another stock that has got low relative strength. Right, it's going up but low relative strength. So example would be AT&T. So if you put AT&T, ticker symbol T, boom, notice what happens. So you can see that although AT&T is kind of like going up, right? It's going up, it's going up, it's going up, but it's going up less than the S&P 500. So looking at relative strength, what happens, right? You can see that it's below the red horizontal line. So it's below the red line. It means that it's underperforming S&P and it's going down, baby. It's going down, right? So some people, they may say, okay, I want to trade AT&T, right? So they see a support, and they say, okay, I'm going to buy here, right? Thinking it's going to go up, right? That's a fair technical setup, but because it's got low relative strength, what happens, right? They buy there, it goes and it can't go up because of low relative strength. So relative strength is really important to support the technical setup which you're trading. So that's one way to look at relative strength using certain charting software like Thinkorswim. Another place to get relative strength is from the IBD, right? Investors Business Daily, investors.com, right? You can check out their website or you can download their free app. Okay, so where's my app? Let me just pull out my app over here. Okay, so the IBD app is, where do I put it? Okay, over there, IBD. Click on that. And you can get the relative strength of any stock using their free app. Now, again, if you pay for it, you can use a screener. There are a lot more functions. I'm not promoting IBD, although I do subscribe to IBD, but you can get the RS for free. Okay, so for example, over here, you can just search for stock. If I search for QDEL, right? Remember QDEL? QDEL, that's the first one I showed you with high relative strength. And what happens? Boom. You can see that the relative strength is, drum roll please, 99 relative strength. Ta-da! Okay, so what does 99 mean? Okay, by the way, IBD, they rank stocks from 1 to 100. Okay, so, well, actually they rank it from 1 to 99, right? There's no 100, all right? So anyway, okay, so 99 is basically the best of the best in terms of relative strength. What does 99 mean? So 99 means that this stock, QDEL, is the top 1% of all the stocks in the market. It's outperforming 99% of all the other stocks. So that's ranked 99. So high relative strength. So for me, I only trade stocks for short-term trading. I only trade stocks with a relative strength of 80 and above. 80 and above. So what does 80 and above mean? So if the stock has relative strength of 80, it means that it's the top 20% of all the stocks in the market. It's outperforming the other 80%. Hence, 80 RS rating would be the minimum, but the higher the better, right? So 99 is the best of the best, right? Now, on the other hand, if you put in AT&T, which you saw kind of like sucked, relative strength sucked. So let's punch in AT&T, what's the rating on IBD? Okay, over there, AT&T, click on T, and sure enough, ooh, the relative strength is 26. That really sucks, man. So what does 26 mean? It's below 80, so it fails, right? So it means that this stock is the bottom 26% of all the stocks in the market in terms of price performance. Research has shown that relative strength-based strategies have consistently outperformed the stock market during strong bull markets. When I first started trading many years ago, I only look at relative strength. As long as it was high relative strength, I had a trade setup, boom, I went in, I bought it, right? And it worked for a while, okay, but there is a problem. And here's the problem. Let me tell you the problem, right? So again, when the stock market is going up, let's imagine this is the S&P 500. When the stock market is going up, stocks with high relative strength would go up even more. Okay, because again, they outperform the market. But here's the problem. The problem is when the market suddenly goes through a correction, right? It drops like 5% or 10%, right? The market suddenly drops. What do you think happens to these high relative strength stocks? That's right, they drop, boom, even faster or even more than the S&P 500. And you could get stopped out or you could lose a lot of money, okay? So that's the problem with high relative strength stocks. They do well when market is going up, but when market goes down, they do worse, okay? So what happens is that these stocks, they have what is known as high beta, right? So they are high beta, right? So high volatility, okay? So why does this happen? Because oftentimes high relative strength stocks with high relative strength, they tend to include many overvalued stocks that are highly overvalued. That means they're extremely expensive. And because they are very expensive, they are overvalued, the moment there's risk off in the market and the moment there's fear in the markets, people tend to sell them and they tend to drop like a stone. So they tend to underperform the market during corrections and bear markets. So once I realized this, I said, okay, so high RS is good, but when there's a correction, right, it goes down really fast. So what could I do to make sure that I choose only high RS stocks that are resilient during a pullback or corrections? So this is what I discovered, and this is one of the things that I teach my students in the professional stock trading course at Piranha Profits. Here it goes, okay? So again, in the past, I only looked at high relative strength because this gives me high momentum. But today, I don't just look at this. I also look for stocks that at the same time are undervalued. In other words, they are undervalued, they have got good value. So when you find a stock that has both high relative strength and it's undervalued at the same time, you get this kind of overlap, which there are very few stocks that meet that criteria, that have high momentum but are still cheap. Very few of them, very, very rare, like finding a diamond, right? So these stocks, at any given month, I can only find about 10 of them, or at the very most 12 of them at any given month. And they change all the time. And these are the stocks which I call MVR stocks, or momentum value stocks. There we go, right? So when a stock has both high relative strength and it's also undervalued and it's an MVR stock, it offers high performance with lower volatility. So these are stocks that have high momentum, they go up really strong in a bull market, but when the market drops, they are more resilient during corrections. They don't drop as much, all right? So you don't lose as much during the correction, right? So this delivers high performance and low drawdowns, all right? So as you know, the market, when you trade, your account doesn't go in a straight line, right? It goes through ups and downs, all right? It goes through ups and downs. So if you have a strategy that has big drawdowns, you get a heart attack, right? So you want a strategy where the market goes up, your account goes up, but in drawdowns, it's not that big a drop, right? It's kind of like minimal drawdowns so that you have a smoother equity curve. So here's the $1 million question. How do we know that the stock is undervalued, all right? So earlier on, I showed you how to look at relative strength. You can use the IBD free app or look at the chart and look at the relative strength line. Now, how do we know it's undervalued or overvalued? Okay, now for trading, a lot of people, they look at the PE ratio and they say, hey, if the PE ratio is high, for example, got a PE ratio of 50, they say, hey, that's expensive, right? And if the PE ratio is low, like the PE is 10, they say that is cheap, right? Is that correct? Yes or no? The answer is no, that's wrong, absolutely wrong, okay? So I teach my students, PE ratio by itself is completely meaningless. A PE of 50 can be cheap. and a PE of 10 could be expensive. So whether a stock is expensive or cheap, it does not depend on only the PE. You have to compare the PE ratio to the growth rate of the company, the earnings growth rate of the company. That is the most important thing to understand. As long as the stock, the company, has a growth rate that is greater than the PE ratio, it is undervalued in terms of trading methodology. Now, you may say, what kind of growth rate are you looking at? It could be sales growth or earnings growth. It could be quarter-on-quarter growth or annual growth, right? But one of the growth rates has to be above the PE ratio. So let me give you a few examples right now. Now, one of the ways that you can screen for high RS stocks is using certain software, and you can actually use the one on IBD. Although it's a paid service, it's not free. You have to subscribe to IBD, and it's worth it, right? If you're a trader, right? Again, I'm not promoting them, but I use them myself. Okay, so using the investors.com screener, you can see that I'm screening for the stocks with the highest relative strength. Can you see RS over there? 99, 99, 99, 99. So these are the stocks that are the top 1% in the market, the strongest stocks. Okay, now, will I trade all of them? No. Why? Okay, give you an example. Let's look at QDEL again, right? So we saw that QDEL has high relative strength. But you know what's the problem? It's bloody expensive. Okay, so it's not a momentum value stock. It only has momentum but no value. So if the market drops, this guy is going down as well. So how do I know? Let me show you, right? So if I go on to Finviz, it's a free website, and I type in QDEL, okay, let's check it out. So QDEL, what's the PE ratio? The PE ratio is 1 to 4. So is that expensive? Again, you can't just look at the PE, compare it to the growth rate. So you can look at earnings growth quarter over quarter, sales growth quarter over quarter, or you can look at the earnings growth this year, right? Either this one, or this one, okay? So the earnings growth this year, well, that's negative, so forget that. Sales growth quarter over quarter, 18%, quarter over quarter, earnings growth 55%. So you can see that the PE ratio is higher than its growth. So this is an expensive stock. I will not touch this. I will not trade this, okay? Now, how about the next one? The next one is APT, Alpha Protect. So again, this has a relative strength of 99. So again, it's a very strong momentum stock, but it's cheap. Let's check it out, okay? APT, Alpha Protect, okay? So this one, you can see that the PE ratio is 41, right? But the growth in the earnings quarter over quarter is 300%, okay? And the sales growth quarter over quarter is 48%, all right? Now the growth for the year is 12%, but it's fine, like you can pick any one of it. So as long as one of the growth rates, so this quarter growth rate, 300%, is more than 41 PE. So as long as the growth is more than PE, this stock is cheap. So this stock qualifies as an MVR stock, Momentum Value Rotation stock. That's right. It's a stock that is both, okay, has both high relative strength and is undervalued. That's an MVR stock. Okay. Now, of course, as a trader, there are other kind of like ingredients I put into it to kind of like further filter it out. So on any given month, I filter usually between 10 to 12 MVR stocks to watch. It's on my watch list, and I'm looking for a setup to trade this list of stocks. Now, if you stay to the end of my presentation, I'm going to give you a free gift. I'm going to give you the top MVR stocks for the coming month of August. That's right. So stay tuned to the end of this video. I'll show you how you can get this list for free. The things that I do at the end of every month is I spend many hours with my research team, and we're looking through all the stocks in the market, and we are kind of like identifying those with the highest relative strength that are undervalued, and we shortlist a list of the top 10 to 12 stocks that I post to all my students at the beginning of every month. So let me show you the list for July that I posted on the 1st of July to all my students. And again, I've been doing this every month for the longest time, right? So this is one of my chat groups. Okay, by the way, do be careful because there are a lot of fake impersonator groups that claim to be my chat group, which is not, right? So the only way to get to my chat group is you have to enroll in the professional stock trading course. You have to complete the courses before getting into the chat groups. Okay, so this was back on the 1st of July. So again, I post the list on the 1st of every month. This was last month, 1st of July. So you can see over here my MVR list. Okay, so what was my list on the 1st of July? AUDC, NVDA, SEDG, CHGG, AMD, LSCC, VRTX, CORT, PLMR, CCS, LGIH, IBP. So these are the top 12 strongest stocks in the market for the month of July. And so all my students in my chat group, we just focus on this list and we look for the entry and exit points in this list. Now, if you ask me, hey, what do some of these companies do? I've got no idea, right? So again, this is short-term trading. In trading, it's a one-night stand. We've got no idea what the stock is doing in terms of the business under the stock, right? Unlike investing where we do a lot of fundamental analysis. It's purely based on technical analysis, right? That's it, okay? So how did the stocks do in July, right? Let me show you how powerful this list is. So I'm going to show you right now, all right, the charts over here. And this is the list, as you can see, AUDC, NVDA, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 stocks that were chosen for the month of July, okay? Now I'm going to show you how well these stocks perform versus the S&P 500. So I'm going to load my comparison chart over here. And again, this is, let's look at the last 1 month, right? So go to the last 1 month and you can see how well it performed. Okay, so let's look at the first one, AUDC. Okay, so this purple line that you see, that's the S&P 500. Okay, and this is the stock over here. So you can see the AUDC, right, went up a lot more than the S&P 500. So it outperformed the S&P 500. So these stocks are meant to outperform. And you can see the relative strength, very, very strong over there. Okay, so that's AUDC, NVDA. So again, NVDA, you can see outperformed the S&P 500 as well. Okay, next one is SEDG. Whoa, you can see it really outperformed, right? So that's SEDG, that's the S&P 500. So when you are able to pick the stocks that outperform the market, you're able to get a lot more returns than just the average index return. So even if the index goes up 1%, but you are able to squeeze out a lot more than that. Okay, now of course, did all the stocks do well? Of course not. You can't get a 100% hit rate, right? Like CHGG, well, this one outperformed as well, as you can see, outperformed the market. AMD, whoa, this one really outperformed the market. You can see AMD flew up versus the S&P 500. Okay, majority of them would outperform the market. Next one, LSCC. Okay, now this one did not outperform the market. You can see that it moved with the market, right? So this was kind of like average stock, did not outperform. So let's put a mark there. So this one did not really outperform. Okay, next one, VRTX. Now this one actually did worse than the S&P 500, right? This one sold off versus the S&P. So this one was a disappointment as well. Okay, and next one, CORT. Okay, this one underperformed as well, as you can see. Went down, market went up. So this one did not do well as well. Next one, PLMR. And this one performed together with the market, right? So this was, okay, so this was together, this was together, this was underperform, right? Next one, CCS. Okay, CCS. Okay, this one also performed in line with the market. All right, this was in line as well. Next one is LGIH. And this one you can see massively outperformed the market. Massively. Right, so the market went up, but this sucker really took off. So LGIH was a big outperformer. Last one, IBP. IBP also outperformed the market tremendously. You can see IBP going up over there, right? So you can see that out of the 12 stocks that passed my list, right? How many of them outperformed the market? 1, 2, 3, 4, 5, 6, 7. 7 out of 12, right? 7 out of 12. That is 58%, right? So 58% were outperformers, did really, really well. And about 3 of them, 3 out of 12, did okay, right? So 25% of them did okay, right? Blah, blah, blah. And of course, there are 3 of them that underperformed the market. 3 out of 12 that sucked, right? So 25% of them sucked. Right. So again, in trading, what is important is about diversification. So what my students and I we do with this list of 10 or 12 is that we hold almost all of them when we see an entry signal. And this is covered in detail in the professional stock trading course, the exact entry points and exit points and stop losses. Where we place the stop losses are very, very important, right? And you can see that out of 12 stocks, right, that we entered, basically about 58% of them made a lot of money, 25% of them made some money, and of course 25% of them lost money. So in the end, you make money. So always remember that in trading, in short-term trading, you don't win all the time. But you win more than you lose if you trade the right stocks. And as long as you win more when you're right, you lose less when you're wrong, you are squeezing out a profit consistently and growing your portfolio. So once again, for those of you who enroll into the professional stock trading course, level 1 and level 2, you get into my Telegram private trading community where I will post the list of stocks for you every single month. And this is based on hours and hours of research that my team and I, we do to identify this list of stocks that we trade using a set of entry exit rules with stop losses in place. But like I promised you, I will give you a list of stocks for August for you to see how it outperforms the market. So you can click on the link in the description below of this video, or click on the link that you see on the next slide, and it'll take you to a page where you can subscribe for a list of the best performing stocks that are coming out next month in August. So this is Adam Khoo. I hope you enjoyed the video. May the markets be with you.